Hi everybody, happy Tuesday, Austin at Homeowners Financial, and we're talking about the difference between your down payment and your closing costs. So your down payment is a percentage of the property itself. 3, 5, 10, 15, 20% down. This is your equity contribution, your buy-in for the property, okay? Now this can be your own money, it could be a gift. There are some grants available, but this is literally a portion of your equity buy-in. Now let's talk about your closing costs. Closing costs have three subsets. They are your loan fees, right? Underwriting, processing, doc, appraisal, everything that's required to originate and deliver a loan to you, all the verifications and things of that nature. Typically, these are static. Your static loan fees are indeed your underwriting, your doc prep. Those don't change according to your loan amount. They can change maybe on the type of loan, if it's a different broker or different investor, but they're static, irrelative of your loan amount itself. The next segment are what are called title and escrow fees. Now here in California, we are an escrow state, so I'm not referencing the attorney states, right? Florida is an attorney state. You may have attorney fees. Massachusetts is an attorney state. You may have attorney fees. So we're talking about California with title and escrow. Escrow is a neutral third party that takes in documentation and money and sends out documentation and money. They take instructions per your purchase contract. They typically have fees that are split between yourself and the seller. You can negotiate that you're paying for all of them. You can negotiate that the seller's paying for all of them. But these are things such as, again, the escrow fee, a notary fee. They may be a loan tie-in fee. They are your title insurance. And they are, again, set by the terms of your contract according to who you decided that you're going to work with. If you nominate First American Title, we're using First American Title's fees. That's what everyone agreed to. It's not necessarily those set by your lender. And the last most variable, most expensive part of your closing costs are what are called prepaid items. These are your recurring costs of home ownership you shore up as closing. For example, when you buy a property, you pay the first full year of hazard insurance at closing, 1 whole year of insurance. Now that's the insurance policy that you and your carrier set together. Those are your negotiations with them. Those are your coverage levels with them. Again, irrelevant of your lender, irrelevant of your title company, irrelevant of your real estate agent. That's you and your insurance agent. You also have prorations of property taxes. Taxes here in California are set for 6 month chunks. So you're going to own it for a period of time. The seller's going to own it for a period of time. Whatever bill is either due or most recently paid is that proration of time that's going to be split up. So you will pay that difference of time. And then of course you have interest. Now here at Homeowners Financial, we charge interest from the date of closing, not a date of funding. California being a good fund state, we fund typically the day before closing. There are some times that doesn't happen. Maybe it's a Friday, the last day of the month, right? But typically it's the day before closing. So yes, we're putting money on your behalf a day before we start collecting interest on it, but you'll pay it from that day through the end of the month. For example, if you were closing today on August 9th, 2022, you're actually going to pay interest from the 9th to the 31st of August, and your first mortgage payment is going to be in October. Can't believe I'm saying October, because interest is paid in arrears except for at closing. So again, when we're talking about your down payment, it is that percentage amount. That is your equity buy-in of the property. And your closing costs have those three subsets. Your loan fees, right? What does it take to originate your loan? Valuations, verifications, processing, and underwriting. Title and escrow. What do you and your seller agree to? What company is being used and who's paying for what? And then prepaid items, your recurring cost of home ownership you shore up at closing. I hope that gives some relevance, some ideas. Please let me know what I can do to help you or anyone else. It's Austin at Homeowners Financial. Make it a great day.